Hi, happy afternoon and happy FOMC. You guys ready? So the market has still been going up, just up. And I don't know how much of a plan I have for today. Looking at all these levels, we don't really, there's not really much. We tapped into this 4 hour, so this here could be good liquidity. The 4 hour closes at 2. So that aligns with our FOMC. Otherwise, we have a 4 hour down here. Big 1 hour here, but we've tapped into it. So not really seeing anything too obvious. More of what I'm thinking is that we will watch and see what happens. So depending on the range, like the range right now is what? Yeah, about 500 ticks. So I'm thinking that we will do our journal. Do our journal, do our prayer, and then see what the market has for us. All right, who's ready? So does everyone have their notebooks out? I got my notebook here. So pre-market journal. Don't forget the date. October 29. We can write FOMC session. And now really what we want to do is write our intentions for the session. So yesterday I kind of made a big oopsie with my intentions, and I, in a sense, had intended to lose, which did in fact happen. But that's okay, we managed our risk, and it's quite the small loss, and I did lock out, so no other trading. While I have been peeking at the market today, I did see that we never created a fair value gap at open, and the opening candle was just really lame. So super glad we sat out on this. So let's write our intentions now for our trading. Likely we'll be trading for 30 minutes because Powell starts speaking at 2:30. So ideally we want to be in and out before that, or just wait and see kind of what happens. So on with our intentions. I intend to watch and place a trade once I have more context. I will risk 200 per trade. I hold my trades to my target. I trade calm and fearlessly. Perfect. All right, so I'll show you all my notes and we can go with our notes. So since we don't have much of a plan today, kind of what we're waiting for is that 2 p.m. data wick, because a data wick would be very nice. If we do get a data wick, we are going to check to see if it's protected, because protected data wicks, I find, do not do the same as where they sweep one side and go to the next. Yeah. So I intend to watch and place a trade once I have more context, so that we're really waiting for that data to be released at 2 p.m. I will risk $200 per trade, so my sizing will depend on the size of the stop loss, but we will be risking 200 bucks. I hold my trades to my target, and I trade calm and fearlessly. So amazing. I really like that, and I feel good. Now we can take a minute here. We'll have a minute of silence, and then I will speak for a minute. So enjoy the thoughts in your head and make them good ones. All right. Now we can start with our prayer to ourselves. So the first thing we should say is thank you for showing up today. Thank you for showing up in the face of failure. And even though we do fail some days, we always come back and give it our best the next day. Thank you to this beautiful sunny day. I'm very happy to be trading at my window and not in my basement. Thank you for FOMC, which gives us really good opportunities in the market. Thank you for all of you for joining us today. And yeah, let's get this. Thanks. All right, we got about 6 minutes here. The first daily gap is here, but it's huge. It's just all the way here. This I wouldn't count as a daily because this candle isn't closed. 4 hour, really kind of looking a bit like a hammer. However, this one also looked like a hammer, and then it went up. Another hammer here, and it went up. Oh, the one thing that I can notice is ES is really stalling before 700. So NQ took 300, claimed 325 all the way in that rally. But if we look at the 4 hour, ES has kind of been more in consolidation. This candle here, there's been a lot more expansion on it on NQ than there has been on ES. So and I'm not even seeing 7,000 on my BOOKMAP. I did have a level here, here, 6925. So this on ES, let's see if I can pull it up. No, oh. Okay. So 6925 on ES here. Price was coming down, and then those orders came in. And then that's when price started to lift up. So those orders were really pulling us down. Well, how do I hide this? Oh, did I change my BOOKMAP one? There we go. Perfect. So yeah, that 625 level, although the orders are gone now. Okay, let's turn back on our sound. 15-minute. Like, really, there's not much. There's no obvious gaps. This obvious one here was inverted, and then we just kind of woo. 5-minute. So yeah, let's just give it that 2.5 minutes here, and then see what that data wick brings. We've been trading under VWAP for a while. I was watching, and I had considered just sending a short here, but I probably would have targeted, like maybe I would have targeted this, but I probably would have targeted down here. So there was no really any entry model. There was this. Not really anything. We swept out a high, which swept out a, no, we didn't actually sweep out the high. This one swept out the high. Okay, I can see price getting ready for news. You can see it. Look, we got a little volume imbalance. Little pumpity. Let's watch that pumpity. We got a volume imbalance too on the 1 minute on ES. I don't know about you guys, but I find that those volume imbalances do tend to come back. So 26375 I am seeing printing now on NQ. We've got one below at 200, just below 200, and then 26125. Actually, I've got that one marked out too. So 26125 here. I saw that on BOOKMAP, and it had just lifted. So it had just lifted, and then now it's coming back. So that might be a good target. Is our BOOKMAP moving? Okay. All right, about a minute here. Okay, gonna make my charts all nice already. I got MNQ ready to execute over here. I am gonna just put 3 contracts. I'm gonna set it at 3 contracts. Okay, there we go. Look, we got the news candles coming. $15 seconds, 11 seconds. 5 seconds. You see the volatility start ramping. All right, all right. Boing, boing. Woo, which one's it gonna do? Is it gonna go up? Is it gonna go down? There we go. Okay, I was about to put an emoji because nothing was happening.
Stop ES buy.
Okay. Oh, look at ES. Really nice data wick on ES. It took out a high inside of fair value. On the 1 minute. Oh my god, it punched into a tiny 3 minute. Oh, there's a 5 there, big 5.
Sweep NQ sellers. Sweep NQ sellers.
No highs. So really it took out this. Oh, did it? Let's see, it's important if it took this out, because then that makes it protected.
Iceberg NQ sell.
Very, very... What about ES? ES, it took out like a bunch of relative equal highs, so not quite too sure about that as a target. Let's just watch and see. It's only been 2 minutes. Yeah, you could take this. But who trades the 15-second other than Trinity? It's a nice wick. It's just it took out liquidity. So I would not target that.
Stop ES sells.
See if we can see anything. 4%. What does that mean? Oh, okay, so they cut rates. They did cut rates. Okay, so this might be some type of Judas swing. Oh, I am seeing really big orders. 6935 right here. $26285 on NQ. So, it's not as big though. It's only 50 orders, but on ES it's like it's 1,000 orders. So I believe that this is manipulating price. Honestly, I would take a short there, but I don't really have many confluences. Let's take a look. Any higher time frame closes?
Sweep ES buyers. Absorption ES
Okay, now
sellers.
it's gone. Maybe you guys noticed before me. Oh, on NQ's gone too. So someone's playing around with price. Delta, ooh. 1494 green. Only on ES though. 1494 green.
Stop ES sell. Stop ES buy.
I would say that if this forms a 1 minute to go up, we should take it, because that big square, that's crazy buyers. Oh, that's 30-second. Again with the 15-second. I don't know if I want to target that data high though. It's not really, we could. Let's see how this closes. Maybe I'll go in 1 micro because it's only it's a 15-second. Oh, now it's invalid. Okay, never mind. So let's look at the other ones. So we have these two 30 seconds here. And the only reason why I'm considering targeting that data high is because the delta on that one square was huge. So, and I haven't seen any negative delta that weighs that out. Minus 216 plus 216 plus 72. So we would really need to get in a really big square. Minus 172 plus 124. I know a lot of people are already saying that the rate cut is priced in. But who knows? Just give it a minute. If we were, yeah, price is so neutral. If we were to go long, let's see what our risk would be. Okay. Not bad. Does not look like it wants to break above that though, however. No 2 minute. No 3 minute. Yeah, look there. It's that delta. That delta really tells you. This would be our break even. Still got a while on that candle. ES is going for it. See about the 30-second. No, if the 30-second closed both, yeah, I would have considered, but it did not. You just have a huge wick here. Look at that 15 minute. Oh, just see how the 4 hour closed. Okay. No. Still very choppy. So let's just wait. Still very choppy. So I think that 1300 square was neutralized because on the next square over it says it's not in the top square, but it's in the bottom square, which is the delta change. Would honestly love the opportunity to take a really nice short. I'm not taking this now. There's too much chop. No 2 minute, no 3 minute, no 5 minute. All we really got here is this 1 minute and this 30-second. The last gap in the leg seems to be holding, so.
Sweep NQ sellers. Absorption NQ buyers.
Just wait till we see any type of indication that it's our trade. And if we don't take a trade today, that's fine. I mean, this week has been kind of packed with news. And it's not the news really that I'm concerned with, but it's more just the all-time highs. We just friggin' pamped. Did nothing but pamp.
Sweep NQ sellers. Absorption NQ buyers.
So one thing we have learned doing IFVGs is at this point now, if we do inverse this, we should go the opposite way. And look, VWAP has been holding. Some bodies closed above, but it's strong. Okay, still not much here in terms of delta. Maybe the market is waiting on Powell speaking. I don't know how many you can find. So we did get the rate cut. And then FOMC statement, press conference. How do I view it? Okay, guess I can't. Let's check. There we go. Okay. Okay, I have the FOMC. Okay, you guys can see it. See? That's a setup in itself. I'm starting to believe in that one. Because look, yeah, ES closed above it with lots of chop. And then we just went the opposite way. So yeah, that's kind of what tells me that the rate cut is priced in, is that we got the rate cut and then nothing happened. We got the rate cut, it's like, woo, boom. I'm not even gonna leave you a data wick. I'm just gonna take out another form of liquidity. Thanks. So yeah, we could get in to go down to that 210 level. However, there is no setup. So we're just gonna wait. Boof. And then tonight, after market, we've got like 2 or 3 earnings. I forget which ones they are, but we have 5 Meta, Amazon, Microsoft, Google, Apple in the next 2 days. So yeah, BOOKMAP could tell us right now that we are going to go and hit these, hit that 26210 level, but there's no setup, so yeah, look, ES took out a high inside of her value gap too. So this high is pretty protected. I would say, like, maybe we're not coming back for it now. Maybe we'll come back for it later, but it does not look like a good target. No good target. Checking news, checking news, checking news. Nada. Okay, this doesn't look bad. Now we finally have some momentum. But not really a big fan of that target. So how about if price comes in something like this? I think that would be the better option. It's like a shitty market open. Remember once Ryan mentioned that data highs that are protected aren't good targets, but then I see him targeting them still. And I asked him about it, but he ignored my question. So then I asked Tempo about it, and so far he's ignored my question. But okay, about 12 minutes here until Powell speaks. $260.
Sweep and Q buyers.
That's what I'm seeing here on BOOKMAP. 260, 275, 26, 300. 26, 300. So yeah, that didn't even give us a chance to participate. I could see something like this working, where we come in, we go down, we come in, we go down, and then we finally inverse it, but we'd have to inverse it like with insane power. Oh, ES looking like a nice V-shape recovery. Oh, that's fucking gay as shit. Just like, no, it did not. No. This could still work, but it did not inverse it. And we have been talking about how it's a terrible target. But that looks nice. That looks pretty V-shapey. That looks like it's gonna go up. Oh, I am gonna buy here.
Order filled.
Okay, we'll give one a go. One micro. I was like, oh my god, is it a mini? One micro. So let's... let's try that data target. I didn't want to target it, but the V shape looks good. And we are printing... uh-oh. And we are printing green squares. So watching this closely, as you all know, I don't trade with a stop loss. I don't like to be wicked out. So we've got this, we even have this here. We haven't tapped into it yet. The delta's not looking bad. It's really what sold me is the V shape. So if it doesn't work, it doesn't work. But we're only risking one micro here, so. I'm holding because of this. Look. And my size is so small. So this here, we close below. Oh, yeah, we close below, but it's so far, right? So I took this trade on the V shape. So we'll use this fair value gap as our stop loss. All right, this does not look good for us. So give it a minute, give it a minute. Okay. Just give it a minute. I almost canceled my order, but I'm only in one micro, so it doesn't matter. So just give it a minute. See, it's still held that fair value gap. All right, now I'm gonna end it.
Order filled.
Because if we held that, we should... Oh, don't do it to me. If we held that, we should just pump... Oh, damn it. I did it. I did it to myself. All right, let's just wait. And there's lots of liquidity to the bottom. Woof. It's too close to Powell speaking now to get in, so. Okay, we're gonna delete this. We didn't take any liquidity, not on NQ, not on ES, so. Trying to see if that long was even still valid. Maybe it wasn't even valid. Yeah, it was like just barely. But now that we're coming up to Powell speaking, we can't really be in a trade like this because he's gonna talk and we won't be able to go break even. So not much on ES, but we're seeing a lot below us on NQ. So yeah, look, it's holding. Now it's not smart to get in. Where was our entry? $251. Okay, so it's like right here. Didn't really sweep anything. It really held this very nice. Makes me want to get in again, but I'm just gonna wait. Because Powell is speaking very soon. There will be many more days to get into trades. And who knows, earnings tonight could leave us a very nice news way to target. I don't know if you guys have seen those earnings candles, but some of them are just like, bam. So you could have taken a short. However, we didn't sweep any liquidity. Nothing. So it's just a pattern trade. We've got 3 equal lows on ES. It just looks like it's gonna bomb. But we don't have any indications. We don't really have much here to tell us what to do or to get in. So 3 minutes till Powell speaks. Maybe we will hear a word and press the button. I heard that's what some people do. So yeah, that trade down $50.50, which means that it was about 101 ticks. Not too bad. So can we see anything coming on the books before Powell speaks? No. Nothing. Okay, one more minute. See, we would have had to cut our trade anyway. Because I'd like to go break even for when Powell speaks, so let's see. So yeah, we'd want to be break even now. And that really would not have worked for us. There we go. Oh, he hasn't come to the podium yet. Okay.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector
Stop
data
and cue
that have
cell.
remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Nick Timmeros, The Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook? Or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way we have been
I'm not
thinking,
really even
I've been
seeing
thinking
much in
about
terms
it
of
is,
Delta.
the
I am,
risk-
however, listening to what this motherfucker's saying.
the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today. It's sort of the same logic. But as I mentioned, going forward is a different thing.
Yes, Powell, you said
Claire
words that
Jones,
are
Financial
important to
Times.
us.
Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's a driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll feel they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the US Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we've seen,
So it's really dumping, but I'm not seeing much on the delta.
trying to reach. Well, what we said for a long time now is that when we feel like we're a little bit or a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place.
Nice buying. Look, you see that?
The balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice. And so there's not a lot of benefit to be holding on to get the last few dollars because, again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby. Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target,
Okay,
seems
we're gonna
to
go
be,
short.
that there are these
One
mounting
contract.
risks to the labor market.
We
But if those
swept
don't
this
materialize,
high
and the
inside of
labor
fair value
market either
gap.
stabilizes around current employment levels
Target.
or even
Oops, I
starts
didn't
to
have a target.
strengthen somewhat. How would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of
Okay, let's
second-round
see.
effects from tariffs?
Yeah, and,
Because
in
the delta
principle,
is coming in.
If you were to see data that suggested that the labor market strengthening
My
or
stop
even that it's
loss,
stabilizing,
I'm not sure yet.
that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state level data on initial claims.
If we inverse
which are
this, I'll
sending
exit.
Sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor
One
market.
micro.
And the fact that we're not
Okay,
seeing
order
filled.
Okay, I'm done.
or a
That's it.
downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing.
Maybe
more
we're
than
supposed to
that.
trade
So that does give you
before.
some comfort.
I think you're supposed to trade before.
But if this
Powell
shutdown
speaks.
lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Oh, don't do
So,
that to me.
we get, like I mentioned, what we get in the labor area. We get some data in inflation, some data in economic activity, and we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel
The buyers are
I think
still
if there
coming
were a
in.
significant or
But I saw
material
really
change
big
in
sellers.
the economy one way or another. I think we'd pick that up through this. So in terms of how it might
As we
affect
did this inversion.
December, it's really hard to say. December's the meeting's I guess 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Steve Leisman, CNBC.
This
Sure, but
candle
can you
here,
characterize
that's a
the,
long,
the
that's a
meeting in
long
terms of, you said
candle.
strongly differing views.
That is
Was this a close
long
call,
one.
this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
Wasn't as
So
strong
I
on
was referring
ES,
to the discussion about, to the extent it related to December.
but we
You saw
inversed
we had-
this and then we
had two
immediately
dissents,
inversed it. So
one for 50 and one for no cut. So, you know, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the
Now we have a
future. What does that
BPR
look
here.
like? And I think people are saying, you know, they're noticing stronger economic activity. You know, forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, you know, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly. In any
Not
case. It
going
may be
short.
just continuing to gradually cool. And again, people have different forecasts
look.
and expectations about the economy and
close
different-
below the
different,
BPR.
Risk tolerances, and so
Oh,
there's
I wanna go
you know,
short.
you read the SEP, you read the
But
speeches.
the
you know there are
range is
different views on the
huge.
committee, and to
That
the
was
point where I said what I
220
Just to
something
follow up on
ticks.
the
So.
balance sheet, if you stop at the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percentage GDP and become a tightening
Oh, that's
factor?
the 30
So
second.
you're right. The place we'll be on December 1 is that the size of
Damn,
the balance sheet
my bad.
is frozen. And as mortgage-backed
Oh, I thought it was
securities
a 1
mature,
minute.
we'll reinvest those in treasury bills, which will
It's
foster
okay.
both
Good thing
a
we're
more
only playing with
treasury
one micro.
balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically, and because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long, but at a certain point, you'll want to start reserves to start gradually growing to keep up with, you know, the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding.
Yeah, so many
universal
fake
treasury
outs. That was our bad.
and we
Shouldn't
want
have.
to move to a place where we're
Shouldn't have been
closer to that
watching on the
duration.
30
That'll
second
take
like
some
that.
time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration.
Pretty sure what we're in
Now,
is
this
the
is something
4 hour.
that's
Yeah,
gonna be,
4
take
hour.
a long time and move very, very gradually. I don't think you'll
1
notice it
hour.
in market conditions.
Last gap in the leg.
But that's the direction of things.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty
Candle.
good assessment of what that will be. When we get PPI, there might be some adjustments, but so directionally.
All right. I think what's important here now is to journal our process. So. Everybody got your notebooks out? So we can do post FOMC journaling. So while I wasn't super interested in the data high, because it was protected. I did really like the V shape. And the V shape and the delta was looking, the delta was looking good. Good, cut the trade. Because I wanted to be BE before Powell spoke. However, now that we know kind of that he takes a moment to get to the podium and that we can kind of watch him, then that gives us some information for next time. Second trade was an execution error. I was watching on the 30-second. Which I confused for the 1 minute. Okay. Now, heading out of FOMC. So I'm not too interested in what I lost. So, yes. So what we did, we followed our plan. We watched price and placed a trade once we had more context. While we weren't super interested in that data high, that V shape, basically on ES, and it was V-shapey on NQ. It wasn't super invalid in my books because I had this high here as break even. No, sorry, this was my break even. So if it had hit here, yeah, I would have, but it hit here. So, and then I was using this as my stop loss. Okay. And also, too, because I wasn't too confident in it, but I did want to give it a go, I sized down to that 1 micro, and that really made my 2 losses much easier. All right, so we can see the market's kind of pumping now.
And
Let's see what
other
it's saying.
investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the others.
Thank you, everyone, for joining me. Thank you, Smaya, for showing up. It wasn't the best trading session, to be honest. We basically chopped until Powell spoke. But that's okay. We managed our risk, and in managing our risk, we gave some trades a try, and that's about all we can do. So tomorrow we'll be back to trading market open. We've got maybe 2-3 earnings tonight, so we'll see how that one goes. But honestly, if this week isn't so great, there's not much that we can, there's not really much we can do. This is my trades for this week. Not really much we can do. Best thing we can do is give it our best shot and come back. So thank you all for joining me. We will be back tomorrow. And make sure you've journaled any trades that you've taken. Journal your emotions. And we'll come back tomorrow and we will set some new intentions for our Thursday.